What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Hope you guys had a great weekend. Huge last few days for the world, for the country, for the United States, and for Bitcoin in general. Breaking news is Trump has picked J.D. Vance to be his running mate, to be his vice presidential candidate. This is very good for Bitcoin. J.D. Vance is one of the largest promoters or proponents of Bitcoin in the Congress. So that is a great pick for Bitcoin. I didn't see the price react quite yet to this latest news, but we will see if it makes a difference. Okay, so Mondays, I am live streaming on YouTube, Rumble, Telegram, and Twitter. So if you're on Twitter, you can comment, I believe, but you can just jump over to YouTube or Rumble. Links are in my pinned tweet, and you can make comments there. Telegram, you can make comments in the live stream post. Okay, we got one here. Okay, yes, and Reed, you said JD Vance is a Bitcoiner, and yeah, I do remember that he put out that he owned Bitcoin for one of his financial disclosures. So yes, he is definitely a Bitcoiner and a big, huge, important pick for Bitcoin in general. Okay, so Mondays, I go over the free weekly newsletter, which is the Bitcoin Fundamentals Report. Let me just bring that up. Of course, you can find this over at bitcoinandmarkets.com. That's where you can find all of my written content. And hopefully in the near future, I'm going to have more time to put out more podcast episodes, at least these live streams as podcasts, and maybe even do some more writing on my own blog. But I do writing there, and we'll cover one of the latest posts that I put out down below. Okay, so Bitcoin Fundamentals Report number 297. And we come down here, quick navigation. So this goes to all the different sections. This will give you an idea of what I cover here. If you're new to my content, we cover headlines for Bitcoin, macro headlines, price analysis, mining, and layer 2. First up is a snapshot of Bitcoin. So we are rallying into resistance. Of course, we'll take a look at a live chart when we go over the price. Media sentiment is positive. Larry Fink is out there making some headlines. And of course, with Trump and J.D. Vance, these are positive headlines. Network traffic is very, very low. Mempool is down drastically. We will take a look at that. Mining industry is currently recovering, especially if you look at hash rate. Hash rate has come up drastically over the last couple of days. Price section. Weekly price, that's as of the writing of this article, week to week. We have 63,510. That's up $7,000 since the last issue, or 12%. Market cap is now 1.25 trillion. Can't wait till that gets to 2 or 3 or 4. Of course, Bitcoin has to get to $50 trillion asset to really have its full benefits felt. Satoshis per dollar, 1574. One Finny, that's my denomination of Bitcoin, right in the middle of the decimal places, is $6.35. Mining sector. Previous difficulty adjustment was -5%. This next one right now is on pace to be about 4%, slightly under, but I think if price continues to rally for the next 2 days, we will get a 4% adjustment to the upside on difficulty. Mempool sitting at 24 megabytes only. This is the lowest since November of 2023. So this was quite a surprise when I checked this morning. Really, the mempool has just been coming off drastically over the last few days. Fees to get in the next block, 89 cents. So slightly higher actually than previous days. So let's say this is back up at 180 and the fee was down at 30 cents. Now we have a 24 megabyte mempool and fees are at 89 cents. So just, it doesn't have to be exactly correlated with the size of the mempool with the fee. Low priority fee, you can save a couple cents if you can wait an hour. Okay, Lightning Network capacity up again this week. So this is now definitely a trend, going up about, I would say, between 0.5% and 1.5% every week. So it added 75 Bitcoins this week to the capacity on the Lightning Network. However, this is also the trend we're seeing: fewer channels. This is a smaller change than we've seen recently, but it is still negative and under 51,000 channels. Of course, these aren't all of the channels because you can't have private Lightning channels, but this is what we have publicly available. Okay, in case you missed it, here's my stuff for Bitcoin Magazine Pro, member content, community streams. This hopefully in the next couple weeks, this will start filling out more with more podcasts and stuff. And my blog post here, demographic collapse. I've done, I think, 3 or 4 now of these posts about demographics. So check those out. All right. Let's head into the headlines for Bitcoin. And let me make this bigger. Okay. So Larry Fink, he is the CEO of the $11 trillion BlackRock. He praises Bitcoin on live TV. And look who he's sitting next to over here. Cramer. And Cramer, actually, at the end of this clip, he is saying, yeah, me too. I've changed my mind. But let's listen to this. I think I have my levels good. I'll turn it up just slightly. And let's go.
As you know, I was a skeptic. Yes. I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe
Okay, so my comment on that is people change, people learn. And I'm glad he said he was wrong. And a lot of people think he's the face of evil. BlackRock is the evil, Hydra or whatever. It can be, but it's vulnerable to market forces as well. And while Larry Fink is probably not, if you knew him one-on-one, you might not think he's a great guy, but he has fiduciary duty and he's doing his best out here. And right at this moment, he is taking responsibility for his past claims. So that is at least something good.
Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where
like the U.S.
You're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did.
Oh, boy. Okay. I can't stand Cramer. I thought he was off, by the way. I thought he was off of all of these CNBC and stuff. Okay, so the points he made here, let's go through them. So Bitcoin is uncorrelated returns or has uncorrelated returns. It's uncorrelated asset. A lot of people will poo-poo on this. It has been correlated with the stock market, but I've shown recently that it has decoupled, and during important periods, it becomes decoupled. I think the main reason that the stock market and Bitcoin is correlated for much of the time. They both have different reasons for going up. Bitcoin is a monetizing asset, and stocks are somewhat of a safe haven play in a recessionary period where people are tightening their belts and pushing money into their savings and into their investments instead of buying a new car or whatever. So they're correlated, but for different reasons. In an investment, it is an investment interest when you are scared. So this is the safe haven asset play, and I think that's very important because he also talked about that when he was talking about a hedge for hope and optimism. So he's saying that Bitcoin is like if you are not optimistic, if you're pessimistic, it is a hedge for you because if you are scared, it is a hedge. For when your country is debasing its currency, of course, we know all currencies are being debased, and that it might not be to the extent that some people claim, but all currencies are being debased, and Bitcoin has a fixed supply. So yes, it's definitely a inflation hedge. But get this: so this is a deflation hedge, and this is an inflation hedge, which is interesting. It's outside your government's control. Okay, that's right out of the Bitcoiner handbook. It's digital gold. This is pristine sales pitch right here. It's digital gold. That's beautiful. That's easy for boomers. That's easy for everybody to grasp. I mean, they can't necessarily grasp what it entails, but they understand the concept that it's digital gold because they understand what gold is. And you're saying, no, it's digital gold. So it's like internet gold. Oh, that's awesome. And so that is a perfect sales pitch for Bitcoin. Unlike Ethereum. What is Ethereum's 2-word sales pitch? World computer? Nah. Code is law. Well, that would be 3, but no, that's app. So what is their 2 or 3-word sales pitch? They don't have one. They're struggling to find one. And anyway, this is beautiful for boomers. Digital gold, an asset class all its own, like other asset classes. So real estate, stocks, bonds. And so that puts it to certain investors. When you're a high net worth individual and you're looking at how to diversify your portfolio, you're going to be familiar with this term of asset class. And you're going to say, okay, so this is an asset class, commodity. It's not necessarily commodity. It's not tech. It's not stocks. It's not bonds. It's an asset class all its own. So I need to work that in and give it an allocation all its own. So Bitcoin won't be part of your allocation to commodities. It won't be part of your allocation to stocks or bonds. It will be an asset class all its own that needs its own allocation, which I think is very, very interesting. There's a real need for it. So this sounds good for Bitcoiners. We kind of understand what this means, but I don't think this was really said very well. It is a way to hedge hope, and we talked about that. Bitcoin has industrial uses, and he's likely talking about the mining benefits here. Maybe even the ability to turn distant energy into Bitcoin and transmit energy across the world. That is a possibility what he's talking about here. I don't know if he's that deep into it, but it definitely has industrial uses. It's very good for the grid, et cetera, et cetera. Well, right after this, Michael Dell tweeted this out. Of course, he's worth $110 billion. And people think he has, because I think, didn't he sell like 5 to 10 billion of his own stock in the last year? So, and people are thinking that's going to be coming into Bitcoin. So he says fascinating about what Larry Fink is saying. Huge. You can't overstate how important this is. We're getting Trump and JD Vance, looks like in the White House, Michael Dell, Larry Fink, they're all pumping Bitcoin. I cannot believe that the price of Bitcoin is not over, $250,000 at this point. Okay, next story for Bitcoin. This is one of our 2 China headlines. The macro also has a China headline, but China might be open to Bitcoin again. With the likelihood of a Trump presidential win, China is taking a fresh look at Bitcoin. They definitely do not want to cede ground to the U.S. with a major pivot coming from the U.S. Okay, I need an editor. So this is what David Bailey said in this tweet from earlier today. he said he told us 3 months ago China plans to greenlight a spot Bitcoin ETF trading in RMB by 2025. So by the end of this year, there are major geopolitical moves being made right now. These things do not happen by accident. And he calls it the Bitcoin space race. Then he comes back and he quote tweets himself saying, colleague in China is very plugged in, who is very plugged in, say my tweet, sorry, Jesus Christ. So this colleague in China who's very plugged in and saw his tweet and shared some insights, said Beijing recently established a new research initiative to study Bitcoin's geopolitical and national security implications. So China is definitely coming into Bitcoin, back into Bitcoin. They have to. I mean, remember in 1871, when the world went to a gold standard, China, they kept their silver standard, and it ruined them. It caused pretty much the century of humiliation because of the inflationary problems they had. And so are they going to make the same mistake, or are they going to join the bandwagon and get on the bandwagon of Bitcoin? Probably they're going to at least open up to Bitcoin ETFs. But man, I've reported on the flood of Chinese money into things like the US, US stocks listed on Chinese exchanges. They were selling, going at a 30% premium for a while. Then we had a huge boom in the gold price as these Chinese investors are looking for a way to get money into non-yuan denominated assets. And that's going to be very important because they're struggling to keep the yuan in this general area around 7.25. They're struggling to keep it there against the dollar. It's likely to break. I mean, Japan is likely to break right now within the next month or so, and the yuan is not far behind. So a lot of people are looking for a way to get money out of China. Of course, they are always doing this. One of the big demand vectors for Bitcoin originally was capital flight out of China, and that will likely come back into play. So we'll see how these Bitcoin ETFs in China actually work out. Of course, Hong Kong has the Bitcoin ETFs, but those are limited use by mainland Chinese. All right, next story for Bitcoin. Mr. 100 is back. I'm aware of the claim that Mr. 100 is simply an Upbit cold storage address, but this is not the behavior of other exchanges and their cold wallet addresses. Why don't we have 10 Mr. 100s? One from each major exchange. So that's that. And then I say no. It is more likely that this is a large customer with a segregated cold wallet account with Upbit. So they're buying and they're custodying it with Upbit. This Mr. 100 has bought 1,500 Bitcoins in the last week and 3,200 since the bottom on July 5th. So that's interesting. I'd like to know what you guys think as listeners, viewers. What do you think of Mr. 100? Is it just Upbit? Could it be a custody account with Upbit? Who is Mr. 100? What are you guys' thoughts on that? All right. Next section is macro headlines. Of course, Trump triumphant after attempted assassination. I only have one thing to add to this wall-to-wall coverage because I don't want to get super political. I've already lost one YouTube channel. And so I will just say this, that this is going to be very good for Bitcoin. All right. He's come out saying he wants to back the dollar with Bitcoin. He wants to protect self-custody, and he is promoting the mining, Bitcoin mining. And just look, I mean, everything the globalist tries, everything they try is backfiring. I saw another quote today from it was like a quote unquote anonymous, but it was some senior Democrat congressman saying that they pretty much resigned themselves that Trump is going to win the election. So they're going to let Biden just be a lame duck and let Trump win it. But we'll see if the deep state has anything else to say about that. So talked about 4:30. It looks like it came a little bit early at about 3:30 Eastern time. And JD Vance was at the top of the ticket, or top of the chances, and he got selected. He is a MAGA senator from Ohio, and this probably the best pick possible for Bitcoin. So very, very bullish. Now I wanted to show this chart, and we were in this flag forming this bottom. Of course, we've been talking about this bottom ever since it happened back here on the 5th, hoping that we get this bullish divergence, which we did get with that. And we're forming this flag, and we were just about to break to the upside. You can see for hours here, this is hourly chart. You see for several hours, maybe even would that be about 12 hours or so, we were pushing up on the top of this kind of the resistance, trying to break out. Then all of a sudden we get the Trump assassination attempt, and boom, Bitcoin takes off like a rocket, like to the minute. This happens. So Bitcoin is definitely performing as a safe haven asset. We also saw this back in March of 2023 with the banking crisis scare. Bitcoin sold off originally like in the first day or two maybe of the banking scare, but then it rallied and shot higher by 50%. So Bitcoin is in all of these kind of really big milestone events, financially, I guess you could say, Bitcoin is performing as a safe haven asset. Now, this goes back to exactly what Larry Fink was saying, that Bitcoin is a safe haven asset. Okay, next topic is trillions in hidden debt drove China's growth. Okay, so yeah, I've been saying this for a long time. It's all been driven off of debt. Now it threatens its future. A story out of Wall Street Journal is detailing exactly what I've been warning about for years. The Chinese economy is on the brink of collapse. And here is just a few quotes from this. For years, this guy that they're quoting, or is that a city, and scores of other Chinese cities together amassed trillions of dollars in off the books debt for economic development projects. So this is the local financing vehicles and local government financing vehicles, and there's a lot of this shadow debt out there that they don't know. Did it come from abroad? Did it come from party members in the CCP? Like, where did all of this local government financing come from? But it is all shadow, so they don't know. It's off the books, and it's big, trillions of dollars worth. The opaque financing was the yeast that helped China rise to the envy of the world. So this is debatable, but yes, it is what gave it the pump. Okay, debt, and a lot of it was foreign direct investment. You know, they say only one country has ever built up without foreign direct investment, and that was the UK, since they were the home of the Industrial Revolution and stuff. They didn't have anybody to have foreign direct investment into their economy. But after that, everybody else has been built up really by foreign direct investment, and China is no different. China was built for the era of, say, 1980 to 2010. That's the era of globalization. That's the era of increasing wealth in the world, increasing the ability to expand debt and credit. Now, when it's going in reverse, we're having deglobalization and credit is starting to have problems. Then, China, their whole economic model is not cut out for this. That's what I've been saying for a long time. So this city in the southern region of Jiangxing, I can't say any of these Chinese names, raised billions of dollars to build the infrastructure for a new industrial district where a state-owned financing group acquired land and opened hotels and an amusement park. Other tracts of acquired land sit vacant, and many area streets look particularly deserted. Birds flit through the rows of abandoned buildings at an unfinished apartment complex. The government is broke, said a local resident. Economists estimate the size of such off-the-books debt as somewhere between $7 and $11 trillion, about twice the size of China's central government debt. And this is, again, guys, I'm hearing some thunder in my local area, so if the power goes out, I'll try to jump back on streaming ASAP. But okay, 7 to 11 trillion, and there are estimates that are higher than this. I think there's been some by Nikkei. They've done some research. The Japanese media empire. They've looked into these local government financing vehicles, and I think their number was around 10 to 12 trillion, if I remember correctly. So there are slightly different estimates, but this is a big number, huge number. And that, okay, well, let's just refinance everything. Well, all of these investments are sitting vacant. I mean, how much is this empty amusement park worth? Zero. It's probably negative. A lot of these state projects, like the high-speed rails and all of the huge, beautiful 8-lane, highway system, all of that stuff it costs more to maintain than it benefits in economic activity. So it's a net negative on the entire economy. And that's what they're starting to figure out. So the 7 to 11 trillion, I mean, that doesn't get rid of their problem. They still have to pay to upkeep all this stuff. Okay. Because the opaqueness surrounding the financial arrangements that allowed the debt to balloon. As much as 800 billion of that debt is at risk of default, economists say, a high risk of default. And this has been about the same. They've been slowly trying to work through some of the most painful debt, but there is a lot of big news out of China as well about smaller banks getting acquired by the larger banks. And that doesn't really obviously help the larger banks. That just keeps the smaller banks from actually having to be insolvent. So these are bailouts when they're getting acquired by larger state-owned banks. So small state-owned banks get acquired by large state-owned banks just to hide this debt that cannot be repaid. So anyway, China is in deep trouble, and this is exactly what I've been predicting for approximately 5 years or so. Okay, next macro headline. CPI comes in negative for June. Recession odds rise. If you guys are watching my content regularly, I did live stream the CPI last week on Thursday, but that seems like a lifetime ago with all of this Trump stuff that's happened over the weekend. So CPI is cooling rapidly. Oh, I was going to link it here, but I forgot to link it. Huge decrease in shelter component month over month. If it continues this week, headline will drop rapidly year over year and likely be negative for a couple more months this year. So here is this. You can see the blue is the homeowner's equivalent rent. And it's a lagging indicator. And I've been saying it's a lagging indicator since on the way up. Okay. It's a lagging indicator. Now it's a lagging indicator on the way down. But obviously this trend, boy, it's a Florida thunderstorm for you right there. Hopefully I don't lose power. Okay. So this is a lagging indicator trending down. And it's not like this homeowner's equivalent rent is going to slowly turn back up. All right. It's definitely going in a downward trend, and that will allow CPI to continue to fall. All right. Next chart I have here is unemployment rate. You can see we're popping out to fresh highs, 4.1%. This sparked some talk about the SOM rule, and I went over that last week or the week before. That is when I think it's the 3-month moving average of unemployment rate goes above the 12-month moving average by 50 basis points is when you are in recession. So it's like a real-time indicator, and it's getting really close to 50 basis points. I think it might have been like 49 or 48 basis points. And so, yeah, this SOM rule was being talked about. Unemployment is starting to tick higher. The newest update to possible recession timing is the 2 and 10 inversion is starting to move the other direction. So if you see this white line is the 2 and 10, the gray line is the 3-month and 10-year. That one hasn't really broken higher, but it's kind of coiling right here. Maybe it's going to break higher. And the 2 versus the 10 is really moving this way. Now you can see all the previous recessions when the inversions turn positive, that's when the recession strikes after a little bit of a delay. In 2008, it took about probably 6 months from an uninversion to the official start of the recession. And, they're not going to say right now this recession is starting this quarter. It's going to take 2 quarters, maybe even 3 quarters if they have to revise stuff to declare the actual recession. So we could be anywhere between 6 months and a year from declaring some sort of recession coming up soon. But I do think that it will be declared at least starting in 2024. Okay, and I say what's the big deal about recession? Well, recessions, going back up to Larry Fink's talk about Bitcoin, recessions are scary. So when you are scared, you are going to buy the safe haven asset, which is Bitcoin. Okay, so enough on that. Let's get into price. And before I do that, I'm going to check any comments. If you guys are watching on Twitter, try to jump over to YouTube or Rumble. Links are in my pinned tweet. You guys can check that out here or out there. Let's see. Raphael. Okay, so Raphael says, Ansel, you have teased a plan to revalue Bitcoin's price. Say Bitcoin reaches a $10 million price and it's already known the dollar is backed by Bitcoin. It would work if the government reprices it to 100 million. Yes. So it would be the opposite of what FDR did when he devalued the dollar versus gold. So yeah, right now the U.S. government owns over 200,000 Bitcoins. They could go through a kind of a secret campaign here to bump that up to say 300,000. They would be way ahead of any other country. I think China has rumored to have 190, but we don't know if that's the case. And 190,000. The U.S. would be way ahead. And then, they could just say that each Bitcoin is worth $10 million or each dollar is worth 1 Satoshi or even 10 Satoshis per dollar. They could just revalue it. And what that would do is, one, it would give a backing to the dollar, and the dollar would help save some of the credit market. But it would also revalue the holdings, the reserves of the government, and they would be able to pay down their debt or at least service their debt a lot more easily. So yeah, I've talked about that in the past. What do I think as an economist for which part that plan to revalue the dollar with Bitcoin? I think it would be the best possible thing, because the other option is a credit collapse. You want to save the credit bubble, at least, because the credit bubble is based off of counterparty risk, that I can't trust my counterparty because they're insolvent too. And so lending between banks freezes up to nothing. Things go no bid. So banks will offer up collateral, even on the run treasuries, 3-month treasury bills on the run that were just issued. And they offer those up to try to get some dollars to service their credit needs, their credit burden. Well, they're being turned down. They cannot find a buyer for their treasury bill. That happened in September of 2019. It also happened in the Great Financial Crisis. These markets go no bid, which is like, you think that's a risk-free asset? You can't find a buyer for your treasury bill. Of course, these incidents only last for half a day or maybe a day. But that's the real problem, is the collapse of credit due to counterparty risk and the obscurity of the market. Now, Bitcoin can go a long way to fixing that. Because what if a bank, the banks are fighting to get Bitcoin on their balance sheet, or at least be able to custody Bitcoin for people. So they can say, look, we have this much Bitcoin on our balance sheet. We're not as big of a risk. So that would go a long way towards safeguarding the credit bubble, because we don't want the credit bubble to collapse. We want it to wind down, but we don't want it to necessarily collapse, because that would cause major economic problems. GDP would crash. We would have, that scene. One of my favorite scenes from The Big Short is when Brad Pitt's character is saying, for every point that the unemployment rate goes up, 40,000 people die. Well, what if we go to 10, 20% unemployment? I mean, you're talking about massive casualties. And nobody wants that. Nobody wants a hard landing. So we want to try to save the credit bubble. And this, at least, like I said, let it wind down. So backing the dollar with Bitcoin would put a backstop behind the credit bubble, I think. So that's what I would say. What's up, Dex? Don't know what Jamesy is. All right, let me check Telegram, see if they have any comments here. Dan, you ask if the vice president does anything. Not sure if this makes a difference. Well, one, they're the president of the Senate, so they are a tiebreaker vote in the Senate, and I think they've Democrats have actually used Kamala Harris for that. So that's their main official role, but they can also be like Kamala Harris, supposed to be what the borders are or something. I mean, they usually get some other non-cabinet position, czar position. And yeah, so yeah, I mean, that is kind of a good point. Would it be better to have JD Vance as vice president or as some member of the cabinet? That might be better. But I do think this is kind of insurance, because he's seen as more hardcore MAGA than Trump is. Okay. So let's continue going with our newsletter. Check out bitcoinmarkets.com if you're just joining us. This is a free weekly newsletter that goes out every Monday. I am live streaming on YouTube, Rumble, Twitter, and Telegram. You can check all the links in my pinned tweet. So, okay, price analysis. Last week I said, in my opinion, price has bottomed or will bottom with one more flush. And the preponderance of risk is to an upside move. This can happen rapidly and gain fuel from liquidations. So here we go. Bullish divergence here. This is where we were last week, right down at the bottom. And we have rocketed up since then. I pointed out some of this resistance. We actually almost touched the 50-day, I think, after I snapshotted this chart. So we might be a little bit higher than this right now. But this is the resistance up here, around 65,000. If we get over the 50-day, maybe close above it, wait a day or two, and then continue higher, that would be the best of all worlds. I talked about rallying into this 20 and 200-day cross. Doesn't even look like they're going to cross now, but that's exactly what happened. So there you go. This is an 18% move from the bottom. Major resistance at 65,000. So it was most bearish before the turnaround. And you guys remember saying, one of my favorite sayings is this darkest before dawn. If you guys remember back here, let's see, when was this? About like the last week of July, I was really, really bearish and I was kind of in a bad mood. And it took me about a day to dive into the charts, dive into the fundamentals, and come back and reaffirm my confidence in this market. And so even with this big dip from last week or 2 weeks ago, this wasn't as scary as right here for me, at least. And yeah, so we have rallied off of that very nicely. Of course, that's why Bitcoin is hard to hold. Bitcoin is not easy to hold. Holding is it's extremely difficult. Most people think it's just a walk in the park, but it's not. It's like that meme where people think it's just a gentle uphill ride on your bicycle, but no, it's going through gator infested waters, jumping through fire. And that's what it feels like to hold, at least. Okay. So these are the good news things coming out recently. Germany is done selling. Mt. Gox effects. I think they're highly overestimated. Most of these people are going to be strong holders. I mean, they didn't sell their claim to these large claim funds, where they collect all the claims. They buy them from you at market price, and then they just collect all these claims. These people have resisted that for the most part, and so they're going to be strong holders. Anyway, I think it's has been overestimated. So it was priced in a little bit too heavily, and that's one thing that made price come down. All right, and Tether has yet to make their Q2 purchase, or they're in the process of it. They've been buying 8,888.88 Bitcoins per quarter the last 2 quarters, and I think I have a image of that. Let's see if I can bring this up. Did I save that tweet? Let me just open this in a new tab. So this is from HODL 15 Capital. And you can see these last 2 quarters, they've bought 888 Bitcoins each quarter. And that's what they said they're going to continue to do. They are highly, highly profitable company. So that is probably going to be coming soon. ETFs brought 1 billion in last week, and they're likely to keep buying. I haven't seen an update for this week yet. Let me see if there's any reports from today's price action. No, it's not even close of business yet, so there's nothing updated as of yet. But I do expect the flows to be quite positive this week as well. The halving effect is kicking in, and MSTR is going to do a 10-to-1 split. That's going to allow for smaller players to get in and allocate some money to Bitcoin through MSTR. So this is also bullish. Okay, so those are all the big bullish things aligning this week. And just 2 weeks ago, we were uber bearish. And now look at all this positive stuff. It's amazing. Okay, the weekly B bands held, and price is now threatening the midline. That's the 20 week. So we did not close below the B bands, which is pretty amazing. It's felt so bearish down at the bottom, but we did not close down there. And now we're threatening this midline up here at 65,000. So that is most likely the next stop. The 1-month heat map shows a strong liquidity pull further into 65,000 resistance area. So we have the price at the time I snapped this was about probably about 63,800 or something like that. And all this liquidity up here to 65,000, that's just going to suck the price right up to 65,000. We'll see what happens after that. The 3-month heat map shows the mother of all liquidity pulls up to all-time high to 73,000. So look down here at the 65,000. That's what was super yellow on the previous chart. This outweighs it by a lot. I mean, just Binance alone, there's like 12 billion or maybe more now, $12 billion worth of liquidations up here. And again, that's just Binance. So it's going to be total, I bet, in the entire market is something like 20 billion in liquidations. They're just like a magnet, like one of those huge magnets that you can get. They're, I don't know, 1 foot in diameter. That's the size of the magnet that's pulling this price upward to all-time high. So this can happen very, very quickly, guys. Once we break the 50-day moving average, we get above this kind of pocket of resistance. If we go back up here, once we get back above this pocket of resistance, maybe we back test it once and then we go higher, we can rocket to all-time highs very, very quickly and maybe more. Okay, especially if we're getting all this bullish news and stuff like that. Okay, what's my conclusion here? Oh, I talked about CME gaps. So we have a new CME gap here. There is another one from last year that's down here at about 20,000. That one never closed. So there is also some from earlier, I believe, like from 2019 very, very tiny CME gaps that never closed. So some of these gaps won't close, but that is rare in Bitcoin. So there is a CME gap down to 58,800. These gaps are formed because of traditional markets are closed overnight and close overnight for a couple hours and on the weekends and holidays. They act as Schelling points. Now, if you guys remember, my TA is mainly about Schelling points. Where are people looking on the chart? Where would people put bids? Where would people put asks? Where's the liquidity? And these Schelling points are going to be acting as support and resistance lines. Gaps are a huge Schelling point. So that's where people's natural attraction is going to be located. There are a couple instances in the history of Bitcoin, but CME has only been around for, since 2017. So there's not a huge amount of history here. These are known as breakaway gaps that don't close. They tend to happen at the beginning of large rallies on high volume. So let's go to a live chart and see what's up. So we got 63,500 right now. Let's go to the daily. I'm going to take this off. Here on the daily, pretty big move. I think we did touch the 50-day moving average. Just bring that up. Yeah. Almost touched that 50-day, right on it. If we break up above here, back test and go higher, I definitely can see that. What was the point I was trying to make? Hold on. Let me find where I was at. No. One second. CME gaps. Oh, I was going to check the volume because the CME gap will be, if it's a breakaway gap, it's going to be high volume. And we are getting some high volume on the day here. Of course, Bitcoin has longer time till daily close. We have 3.5 hours until daily close for Bitcoin. So we'll see if this volume does pick up a little bit more. I mean, it's not super impressive. If we zoom out and go to where that other gap was, actually, we need to be on CME. What am I doing? CME volume, not that impressive. But where was that gap? Down here. So what I'm looking at is this volume line is pretty significant compared to where, the average. And so that is one of the things you need for a breakaway gap. You need a breakaway gap to be on high volume. We do not have that yet. So we will wait and see where this turns out, but there is no high volume on this breakaway gap here. So that would tell you that it's going to be filled. If this does not have a high amount of volume, it's more likely to get filled. So that's what we will be watching for. Okay, so that's the Bitcoin chart. What else do I have to say on this? So important levels to the downside to be watching are the fill in that gap down to 58,800. To the upside, we need to break that 50-day moving average, and that will be huge. The 20-week is also at 65,400. That's the midline of the weekly B bands, and it's also a very important level in Bitcoin history, the 20-week moving average. So that would be another test to get above. If this strong bounce can close above there, we should see a couple days of consolidation full of ETF inflows and tether buys and more good news after another, and then resumption of that juicy liquidity at the all-time high, or resumption up to that juicy liquidity at the all-time high. Okay, so that's all I have for price. Let's get on to the mining headlines. Bitcoin miners are approaching a Goldilocks scenario, says Bernstein. This is an article out of Decrypt. Of course, I linked to it in the bullet point. Will be linked to the article that I'm talking about all the time. In a new report, Bernstein Research suggests that a highly favorable Goldilocks scenario is developing for the Bitcoin mining industry, driven by several critical factors, including increased chances of pro-Bitcoin political changes in the U.S. Analysts believe that Bitcoin prices will remain sensitive to election updates and positively correlate with the probability of a Trump presidency because he is the Bitcoin candidate, right? Bernstein notes that the balance of power in mining chip production is shifting from China to the US. Block's recent announcement of a production-ready 3-nanometer Bitcoin mining chip with Core Scientific as the first anchor client represents a significant change in the industry landscape. So I haven't had a chance to look at this report in whole, but you guys can probably find it through this Decrypt link and then go check out the report. Next mining news headline. Some Texas residents don't like Bitcoin, robust power grids, or freedom. So I didn't see this story in any big headline outlet, but I did see this story kind of shared amongst some of the smaller blogs out there, I guess. This one's from Cron. So in Texas, Bitcoin mining is growing, but some aren't happy with its rise. Some residents report sickness. There are also worries of its energy cost. Over the last 3 years, Texans have experienced power outages because of deep freezes and hurricanes. Residents have been furious over the capabilities of the state's power grid. And the last week hasn't been rosy for utility providers in southeast Texas. About 40 miles southwest of Fort Worth, a new threat to compound the state's power problems may be emerging. It's actually the exact opposite. Texas is currently the center of the Bitcoin mining world with 10 large facilities, and residents near one in Hood County are feeling the effects in 2 ways. They are worried that Bitcoin mining will lead to another statewide energy failure, when it's exactly the opposite of what will happen because they're idiots. Bitcoin miners will shut off, and that power will go directly back to the grid when it's needed. These people are moronic, okay? And others, they're getting sick. According to a July 8th report by Time, a Bitcoin mining site in Granbury and recently acquired by Marathon Digital Holdings is causing residents to experience everything from heart palpitations to migraines. Oh my gosh. I mean, that the mining facility isn't right next door. And isn't Marathon the one that has shown all this submerged mining now, like water cooled? So it's like not even causing any noise. And heart palpitations, like what is that all about? I mean, this tells me that you need to seek some help. Probably mental. I mean, if Bitcoin mining is giving you heart palpitations, maybe either you need to buy Bitcoin because you feel like you're going to, miss out. You got some FOMO going on. You get some heart palpitations, or you need to see a doctor, like a mental health professional, because Bitcoin mining should not be causing you heart palpitations. The Granbury residents say it's becoming impossible to live there because the noise is created by the site. Okay, so that's just kind of a funny story. Let's go on to the next headline for Bitcoin mining. U.S. Bitcoin miners huddle in expectation of Bitcoin price rises. I've been talking about this dynamic for months now. As the price of Bitcoin rises, those underperforming miners that haven't diversified or locked some capacity into AI will likely be rewarded nicely with stock price gains. So this is from Cointelegraph, and that's it. I just been talking about this dynamic. I saw this headline and I wanted to include it. So before we jump into hash rate and difficulty, let me see if there's any more comments here. Okay, BTCP says he joined late, but he's curious of my thoughts on Fink's comments. I mean, yeah, it's a risk-off asset, exactly what I was saying or what I pointed out. In the newsletter, if you go up here to this section where I talk about it, let's see, where are we at? Okay, right here. So he said Bitcoin is uncorrelated asset, investment instrument when you are scared. So it's a deflationary hedge, and it is also an inflationary hedge, which is his next point. It's outside government controls, which that is right up Bitcoin Bitcoiners' lane. It's digital gold. This is a beautiful one-liner sales point for boomers. It's very, very simple. 2 words, digital gold. That's all you have to say, and they get it. Okay. Ethereum does not have that. No other thing has that. Bitcoin is obviously the only thing that matters in this space. Everybody else is a pretender, but this is the simple boomer marketing line, digital gold, an asset class all its own. People understand that who are high net worth individuals. There is a real need for it. Bitcoiners get that, but I don't know if the lay public will necessarily care about that. It is a way to hedge for hope and optimism. And the way he said it is actually a hedge against pessimism. So if you're pessimistic, it's a big hedge for you. And that is if you are scared. So again, recessionary safe haven asset. Bitcoin has industrial uses. He didn't go into this very much, but there are mining benefits as well to this. So, or benefits to the grid and things like that. So overall, very, very positive, very, very recessionary. He's sounding like he thinks there's a recession imminent and it is a safe haven asset. So that's what I have to say about that. BTCP. All right, let me get back down here to mining. Where are we at? Okay. Any other comments here? Dex said, yeah, it's the miners, not the jab. Yeah. Well, I think it's funny, man. This blaming heart palpitations on Bitcoin mining. I mean, are you serious? This is the most ridiculous thing I've ever heard. All right. Let's go. Let's check Telegram real quick. No comments over there. All right. Let's continue on with the newsletter. Guys, let me tell you, if you're joining me right now, this is Bitcoin and Markets. Monday, I have a free weekly newsletter that goes out on bitcoinandmarkets.com. That's the website. So check that out. Sign up for the free weekly newsletter. You can also support my content there for $5 a month. And for that, you get early access to my blog posts, as well as the chance to win $20 in sats. Every month, we do a price forecast competition, and you have a chance to win. The closest person to forecasting the price at the end of the month gets that $20 in sats. So check that out for members. And there's also a premium tier, and my premium tier is going to be much, much more active here in the coming week, hopefully into the future. So check that out. It is at $15 a month versus the Bitcoin Magazine Pro, which is at $25 a month. So if you are finding me through Bitcoin Magazine Pro, it is a great deal to come over and subscribe to me over there on bitcoinandmarkets.com and get the same premium content. Okay, let's go on to the next section here, or this is still mining, but this is hash rate and difficulty. So difficulty is on schedule for a 4% rise in 2 days. Hash rate is rising rapidly on the price bounce as expected. So let me bring this up. You see hash rate is really ripping right here. And this is a 7-day moving average. So it's even more. Let me bring that up, actually. I can't just leave you guys hanging with that. So let's do this. We go to mining and we go to hash rate difficulty and we bring back in the actual hash rate. Of course, hash rate is estimated by the speed of the blocks. So everything is going to be a moving average, actually, but it just matters if it's like maybe a 6-block moving average or a 7-day moving average, whatever the case is. But you can see this hash rate is really ripping here over the last day, 2 days, as the price is going back higher. Okay, let's go back to the report. And that's expected, okay? Because these miners, they have their calculations. They know what price is their break-even price. Maybe it's 60,000. We were below 60,000, so they turn a lot of their miners off. Once we break back above 60,000, those miners come back on, right? So this is to be expected. As the price rises, these machines are going to get all turned back on. So this is a healthy behavior out here in the Bitcoin mining space. Mempool crashes to only 24 megabytes. its lowest since November of 2023. This speaks directly to two developments in Bitcoin right now. And you know what? I wanted to check something before I do anything else. Okay, why was that lying to me then? Hold on. This is not going to be good. Okay, guys, I think I lied to you here because I had it different selected. So let me show you what I did. I threw myself off. Okay, so this is the full mempool. You can see this pink down here, okay? So this full mempool is actually 134 megabytes. So I lied. So let me, damn, that sucks. What did I say, 134? So I'm gonna go back and change this. Hold on, stick with me for just a second. I can't have this big mistake continue on this. I have to correct it. Going down the mining section. Where are you at? There you are. And update. Okay. So let me just, this pink section, what you can do over here on this filter is you can click and filter out these different colors. And so that's what I did. And I do that so that it makes it look nicer, you know, fuller or thicker or whatever. But as you do that, then it takes that off of the total, which I was unaware of. But that's what I did right there, because this is 27 megabytes right now. So that was my mistake. I have corrected it now. So let's go back here and refresh. It's 134 megabytes, but that's still down drastically from the 180 from last week, or 200 from a week prior, or 500 megabytes at the top. So the mempool is down drastically, but and let me see if I was right about that November thing. God, that's embarrassing. That is just downright embarrassing, people. So let's see. I have to go out to the 1 year. Let me share this. So yeah, it's still the lowest since November. Bring all of these back up. But if we're like right here, yeah, that's true. It is the lowest since November of 2023. So I was correct on that. Okay, sorry, I had to correct that. Number one, these developments mean two things for Bitcoin right now. One, holding behavior is very, very strong entering this price bounce. Nobody is in a rush to get their Bitcoins onto exchanges, okay? People are taking self-custody. People are holding their Bitcoins right now. Bitcoin holding behavior is very strong. And the risk of a crash is very low, since the rises in the mempool, they tend to precede market sell-offs. So when we have a rising mempool, like say over here on the left of this chart, we're that's when we're approaching a sell-off, or at least risk of a sell-off is increasing. When we go down, risk of a sell-off is decreasing. And so right now, risk of a sell-off is the lowest since November of 2023, which is very good according to this metric. Okay, and that's all I have, because there's nothing significant to report from layer 2 tokens. So I'm going to check the chat, see if you guys have any more comments here. All right. Well, if you guys are joining me on Twitter, jump over to YouTube and Rumble, even Telegram. Check those out. Those links are in my pinned tweet. And subscribe, like, comment. Trying to get to that 1,000 subscriber mark so I can monetize the YouTube. Rumble is monetized, and Rumble is a better free speech platform as well. So you can subscribe there if you'd like. Check out bitcoinandmarkets.com. All my content goes on there. And that's it, guys. Let me just do one more check for comments from Telegram, and nothing I'm seeing. So that's where I'm going to end it for today. Have a great start to your week, and I'll see you on